Report, where I share my 44 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, we're going to go through the obvious, the CPI results and volatility that we saw today. We'll talk about PPI and some other elements, but I think I discovered something today which I'll share with you shortly, and we'll also go through the portfolio we built together yesterday. Let's get into tonight's video. Welcome, everyone. This is going to be, I think, an interesting presentation tonight. There was a couple things that happened in yesterday's results that I thought was very interesting. I kind of alluded that we were going to see a kick up in volatility, and we really did. And those of you that have been around the channel for a while, I tweeted out earlier today during one of the crazy rallies that we were having, but the order book just completely emptied out. And what I mean by that, typically we'll have hundreds of contracts on each side within a level 2. We got down to 2 and 3 and 5 contracts, maybe 15 was a big offer or a bid. So that's why you saw these markets just swinging substantially, and it was a sight to be seen. And it's the kind of market that if you get it wrong intraday, and they'll take all your money. Let's talk about CPI and expectations here and what's going on. So everybody, the markets were actually suggesting we're going to get 7 cuts when we came into 2024. Remember that? Now we're down to 0. And originally I said 0. I still think there's a possibility for some cuts, but with what happened in the 10-year today and the back end of the curve, I'm not sure. I'm going to also have to talk a bit about the Japanese yen. It broke to the upside, which is not a good sign. And with the massive selling in the treasuries, that's most likely was part of the BOJ. And I'll go into more details on that in just a minute. But CPI, think about this. It came out 0.1 higher. Imagine if inflation actually really increased. And the 0.1 is so sensitive that it changed the sentiment altogether, just like that, right? And I do have to tell you that the hourly algo, that V trade that I keep telling you about, it caught the sell-off prior to the release, and the turnaround was about a 45 handle rally from around, just rounding numbers, around the 41.80 all the way up to 42.25. It was a rip your face off rally too, and it was signaled right at the hourly turning point that I keep showing you folks. On Friday, we'll go through and hopefully we'll get an opportunity to find some of those in the live stream on Friday during market hours. But we're seeing a couple of things here. In my opinion, the markets are so sensitive, it's just to a 0.1 increase, that just seems a little over the top. What we saw today, we were down about 1.3%. We finished up a little bit below 1% down, but we're seeing the same type of action. I'll show you when I do the S&P, there's a number that keeps printing out there, and it was tradable, I believe, 3 times today intraday, and it was very profitable if you took advantage of it. I'll save that for the analysis on the S&P. So let's talk about the one thing that did happen. It was 3.8 year over year versus 3.7. So one tick across the board doesn't seem like a big deal. Tomorrow we're going to get PPI. And this is, what if PPI comes out 0.1? Does that cause more selling? I think that's kind of built in. I don't think it's going to trigger more selling if that happens. If it's more than that, maybe it's big. It's interesting because the year over year is, I believe, I wrote these numbers down. Hopefully I have this right. A 2.3 year over year, and that's expected to go up by 0.3. So that's a fairly big number. And if it comes out like that, then that could flow over to CPI. But the realities are, and I've told you folks before, these Fed fund futures are, in my opinion, about worthless for predicting anything. And all you're seeing there is the emotion that is being priced in, not a lot of reality in those things. So I'll go through, it's probably going to take me a little longer to get through tonight's stream. The way I'm going to do this, we'll talk a bit about the WaveTech Database, and before I go into the S&P and all the normal markets, I'll actually go through the portfolio we built yesterday. I think you folks are going to be fairly impressed with what we randomly built. So just so you know, I see volume, somebody commenting volume 20% too low. You don't need big volume. Volume is, boy, that's a subject I'd love to spend about an hour just talking about volume and how it doesn't really tell you a lot. On occasion it does, but for the most part, it just is what it is. That's why the order book thinned out. That's why we got a lot of the volume was down a bit. So tomorrow PPI expected to be 0.3, also expected to be 0.1 up, and then year over year is a little bigger. To finish off the show on the PPI and CPI, we're going to have John Williams running around tomorrow talking about inflation, who knows what kind of things he's going to come up with. So it's interesting the way that the Fed works now, and I've talked about this, is that you get a lot of the jawboning. Otherwise, they're going to get the markets to do what they want it to do just by suggesting something, and Williams will be the primary hitman tomorrow, running around talking about who knows what depending on what this PPI number comes out. And just know if PPI comes in line, we could see a huge rally. And I'm not predicting that. I'm just saying if 0.1 up was the sell-off today, then 0.1 down, better tomorrow would be, or in line, could be fairly bullish. So I'll keep unpacking this as we go through tonight's stream. So the only other thing coming out is claims and continuing claims. I've said before, these things have been very stable. I don't see this as a major trigger, although they're considered to be a high impact report. We're looking at 215,000 on the claims. Continuing claims 1.791 was the report last week. I don't see anything going either way here from that standpoint. Let me just look at some of my notes and see what we've got here. I think that covers pretty much everything. I just want to preface before we go into and talk about, we'll take a quick look at the database, but there's nothing really material there. And then, like I said, I'll go bring up the portfolio we built yesterday. Then we'll go through S&P, NASDAQ, Russell, and I want to cover crude oil because we've got some geopolitical risk kind of coming back in again with some of the saber rattling that's going on between Iran and Israel. So the world is on fire, pun intended. We have a lot of hot spots going around, and it just doesn't seem like it's very settled at all, and it's not. So let's go ahead and let's go through the WaveTech database, take a quick look at that. There really wasn't anything material, and it'll be interesting to see if we can crack that 28%. Let's go ahead and take a look at that. All right, so the database, this is yesterday. And by the way, in about 5 minutes, the servers will kick in and start to run. So I actually tried to build that portfolio exactly as I said. It finished, believe it or not, about 1 minute after we got off the live stream yesterday. So we'll continue here, but we look at the database 32.46. I have no idea the way this thing's been moving around, whether today's downtrend will crack that 28%. Typically, the next level on the downside will be somewhere between 28 and 22% bullish. And if we break below 22, then we get into full liquidation. It will go probably below 10%. So 90% of all the stocks on a short-term basis would be basically trendless. And most likely they would even be in a downtrend. So that's going to be the big number. So once again, get the Substack, kendallreport.com/newsletter will take you there. And I'll cover that tonight when I get the results, okay? And just again, normally, let me come back up for a second here. Normally, I don't do a live stream on Thursdays. I've been taking Thursday off and do a live on Friday. I may, so if you're not following me on Twitter, at least hit the subscribe and the bell. I may come up tomorrow and do something depending if there's craziness coming and going around. It would be maybe we'll come up a normal time at 7 to cover what happened in the market. So just know that's a possibility, okay? And so, but there's not much here in the database to garner on a short-term level. As you know, I've been talking about the intermediate, still up at 87%. I think it's at 87.67. There's literally 15,216 symbols in our database. And I'll just bring up the intermediate here. And right now there's 13,340 are long, which represents 87.67%, which is basically 9 out of 10 stocks are ETFs, mutual funds, everything in our database is long right now. Probably the only thing that's not long are any of the mutual funds on interest rates. But from the standpoint of looking at equity markets, this is a really, really big number. There's only one sector that is currently underwater, and it's been long for 11 days. But everything else is above water. And I've talked about this scenario before, is we're really looking forward to a minimum into early November to the possibility of right into February plus as far as these sectors playing out. And there still could be a fair amount of rotation. So what let me just set this up. The next section, what we're going to go into is we're going to go through the portfolio manager. We're going to use portfolio expert. I'm going to show you what we built yesterday. It was fairly impressive, I thought, for just a random selection of stocks of things that you folks like. So let's go ahead and we'll go over there and take a look at those. Bear with me 1 second while I get it set up for you. Okay, I'm going to use the white screen. I think it's a little easier to see. So we put in 20 symbols yesterday. I'll show you, I'll break through the whole thing. I know this is fairly small to look at. I have to figure out how to get a tool that will zoom in and so we can see some of these numbers. So I'll go through and just go through this stuff. But the blue line is what we built. It's not up great numbers on the year. About right now it's up about 6.8%, so not a great number on the year, but what it's done performance, if we look back on this back test, it's pretty impressive from that standpoint. So I'm going to go full screen. I'll show you. The blue line is the live stream one that we built yesterday. And I'll go through what the symbols are. But this, the green line is the S&P. S&P up during this period from April 23 to current, basically a year, is up 27.5. This portfolio is up just about double, 52.5%, and controlled the drawdown fairly good here last summer. And then when the market turned around, you can see the portfolio in October, it turned around really nicely. So let's take a look at a couple things here, what we put in there. And this is what I was hoping to show you folks yesterday, was really just trying to get, I'm going to switch the view here real quick. So down at the bottom here, what we have is the list of stocks that we put in. I'm going to blow this up, but it's going to still be small. There's no way for me to blow this up, but these are the 20 stocks. But if you recall, I'm trading them on two levels. I'm trading them daily and weekly and letting the models just run this out. So we can see last price, there's actually only one stock that is underwater. It is Palantir. Is that it? No. Weekly. But the daily is up about 6%. This is a fairly, this trade's been on for a little bit, but that's the only stock. Well, I take that back. We also have, let me blow this out. Coyote Software, is that? Yeah, that's down a bit. So there's two losers out of all of these things that we picked out yesterday. So one of my goals was to show you something here, is that this manager is so good at controlling risk and trying to walk forward money. I've always told you folks, this is the reason why I've started to show some of this stuff, is that there's a difference between speculating money and managing money. And just since April 23 until current, obviously you had to have these set of stocks, but I guarantee you that many of your stocks, if you go through the process, you would have done really quite well over the last year, and we would have flattened out a lot. There's a number of metrics, like I said, I've got to figure out how to blow this up so it'll be easier for you to see. But this is what I've got up here right now, is every trade that's been done in this portfolio. It's showing every buy and sell, the P&L, the whole bit. So there's full back testing on this thing. If I come back over here to this level, there's the annual returns. This is, last year was the big year, 58%, 6 this year, and just there was only a couple months in 2022 that this portfolio, I tested it back to October of 22. So you can see that's where it's at. But you can see the relative performance. It flows with the markets, but it tends to have a much lower volatility that's on there. Yeah, so somebody's asking, can I show how to find the right stock? And that, I'll tell you what, I will do another one of these. I won't be able to do it today. I wouldn't want to just kind of brush on that. It's pretty important. There are a number of ways to do that. One is through screening, and you can, one of the things that you can do, let me just do this real quick, is I can put this over to a symbol graph here. And one of the things that exists in all of these, hang on. I've got to move this around again, 1 sec. Yeah, one of the things that you can do on your you can come in here, and there's research on every one of these. And this little bar up here, there's a rating for every model. It tells you how well it does on the model. It shows you all the buys and sells. You can see everything by model. So you can literally click through these symbols. And it's the same thing in WaveTech. It's just not modernized like this one is, but you can definitely just like go through charts and see what kind of what's called the ER ratio, effectiveness ratio, and you want to find stocks that you like fundamentally or whatever your strategy is, and then you want to research to see if the platform actually trades it well. Yeah, you know, let me flip it over to dark mode. Let's see if you're right. I believe you're right. Yeah, so, but these, you can go through all these symbols. I'm just randomly clicking on something here. There's, so you can go through every symbol here and just kind of look at what happened. This is the last trade on a weekly NVIDIA. So all this stuff there's complete transparency. So you can see every trade. Same thing with WaveTech. You click on the symbol, it will actually bring up the research on each one of these. And this has a little better flow, but once you build a portfolio, there's complete trade log I was just showing you. There's a trade profile, which tells you what the current allocations are, those type of things. And then over here, I just clicked on symbol returns. It's going to show you the exact how many trades since the inception of the portfolio, what the performance is, the whole bit. So everything's transparent here. Yeah, there's not much, since this portfolio is only built for a year. This shows you month to month rolling returns. So typically you're going to build a portfolio with 5 years back. So, but anyway, the goal here is to really I tell you every night when I come on, I help you manage your portfolios, protect your wealth. What this platform does, if let's say the market turns really south right now, if you have weekly models, you're going to have a lot of invested in. If you have short-term models, you're going to have a lot of cash. So depending on your strategy, whether you're longer term or I like to mix the both, I'll put some symbols in with daily. So I'll trade short term on higher volatility stocks and more trending stocks, and I'll put in as a weekly. And then that gives us a little more longevity. But the point of showing you this is I really feel the WaveTech platform is something that is reasonable. If you're running a large 401k or doing have a fair amount of money, then the platform I just showed you would be more appropriate. But you can go and check both out. Go to kendallreport.com/WaveTech. That's WaveTech, and you can go to the same thing, Kendall Report /portfolio expert. Just remember there's no E in expert. And you can also go to our website, portfolioexpert.com, no E again, and go to support. There's a bunch of videos there. You can find out a lot more. So, you know, if you're managing 401ks, you're doing some, actually looking to manage your money more professionally, this is a pretty easy way to go. And I'll just tell you that we are working on putting together and modernizing WaveTech. So that's in the process right now. So anyway, so from here, let's go ahead and go back on, and we'll go through the normal markets that we cover, and then we'll see where we end up here at the end. I'm just looking here. We're right now about 24 minutes in. So hopefully I can get through this next section fairly quickly. Okay, let's start off with the S&P. There's something that I mentioned in the Substack. I know I mentioned it as well. This is, let me get to the weekly. we got one of those outside reversal bars last week. So we had one of those events where made a new high from the previous week, made a new low, and we closed on in the lower end of the range. So this week, and I've been talking about this, let me just get this out of the way. This week, what we need is we need to make a lower low than last week, and we did that today. That number was 51.91. We printed down to, I believe, 76 today, and we came almost down to this 10-period moving average. So it's going to get interesting. You see this upward slope, so there's decent support here. But for right now, we've got a confirmation. The way that trade should have worked is you let it close on the open on Monday. You get short. You would be short at 52.63, and then you would try to hold this into the close on Friday if you were doing this on a weekly basis. But this, what more importantly, from an analysis standpoint, I think there's more here, because if we close down, the next level is going to be at the 21-period moving average, and I've been advertising around 50 on the S&P would be likely somewhere between 51.25 and 50.50 would be the downward target for this market. If we do get a close, it has to close under last week close, which is 52.53. So in theory, anything under 52.53 on this Friday will confirm this pattern, and typically you'll get 2 to 3 more weeks of downward pressure. And the only thing that's throwing a kind of a somewhat of a bug in the ointment is this 10 that's rising here. But if you look at the algos on the weekly, we're seeing a pretty decent decline there. So let's go over to the daily and see if we can spot what the probabilities are for tomorrow. And it's interesting because this is one of those V's I tell you about all the time. Let me draw this in, make sure you see it. The V on the, right after the big collapse this morning, after CPI came out, the next hour, so it comes out, once we open, it's at 9:30. By the time we get to 10, that's the hourly close in the next bar. There was a V sitting there waiting to be bought. And it was absolute amazing. Like I said earlier, depending on how well you played, it was 30 to 40 handles plus on that trade. And it was a quick and fast ride. The order book was pretty much washed out from that standpoint. And, so what we're expecting from here now, if we look at this on a daily basis, it's saying that tomorrow is going to probably be a low, and we should turn around on Friday. And this is what I wanted to show you. I'm going to see if I can get this up here. Hopefully I can find it. And I'm bringing up a 5-minute chart. Yeah, we'll be able to find it right here. Let me get rid of all this. So I want you to look at this. This looks like an EKG, and I'm going to draw in some patterns that was absolutely amazing today, in my opinion, because I traded them really, really well. So well as it ranked one of my second best days ever. So here's what we got. I just want you to see this volatility. We kept getting these spikes, and I'll show you, because even on this 5-minute chart, we were getting those V tops and V bottoms, primarily on PPM1. And then it started to contract as we got into the day. And this is a pattern. I'm going to wipe all this out just so you, but this was very erratic trading. The order book was virtually empty, but you could still get trades off. But if you got them wrong, they were going to, if you thought it was going to collapse here and you sold this low, these are 5-minute charts. So they were giving you an opportunity to get out. But if you didn't pull the trigger pretty fast, they started to take your money very quickly. But this kind of volatility, I've been basically complaining there's been no volatility. We've had these contracted ranges. As we look at this pattern that's up here right now, we got this big downward move, but this was, let me take this off and see if we can, I'm just going to put the hourly chart up here. And so this morning, right here, I put a cursor here. That bar, the next projected bar was an uptick. Now, it doesn't look like much, but those are, I always play that. I'm looking at that. I'm correlating it with the 5-minute chart. I'm hoping that we get one of those like on Friday that I can show you real time and catch one of these. But it was a huge move. The next 2 bars stayed positive, and then it turned down. And I'm telling you, if on this PPM1, those of you that have the indicators, if you don't, go to kendallreport.com/indicators. But what these things, they completely signaled this turnaround. Now we got right at the end of the day, we got another V spike, but because of the overnight nature, we didn't really get much in there. So you have to watch how these form overnight. Right now, they're just stabilized. But this V bottom was there, and if you went to a 5-minute chart, don't know if I can. Yeah, maybe I can find this. But the 5-minute was just over in this area here, just gave a grinding signal up. If you look at all of the indicators, they were all turning up, crossing first derivatives, and what we got was a grinding move up there. And this was, this was off of the opening this morning. And then you can see it. Let me expand this range so you can see it just a little better. But this is the pattern. Once we got, this is what I call the echo. You get this big collapse, you get the echo move, and then you get into that contraction, and that contraction shows up on the hourly chart always. So we get this big volatility, and then you get the squeeze, and we're into the squeeze of the volatility mode as of yet. But inside of there, the PPM was just signaling moves. Perfect moves. I mean, I was frustrated because I left my office for just a few minutes and I missed 2 trades in like 15, 20 minutes. That's what breakfast cost me. But the point is that what we're seeing here after this big drop is this volatility getting squeezed down on an hourly. And if we bring up the algos again, they're suggesting kind of stability probably coming into this downward shape PPM here. So that's your 21-hour moving average. So a couple things just to summarize what we just talked about. The outside reversal week that is out there, that's a big trade, potentially down to 50-50, maybe even more, depending on how this thing, if it comes together. We're going this week. We've probably seen the low. We might see a spike lower, but as I showed you on the daily charts, they are actually signaling that Thursday will be a low, Friday a recovery day, and depending on what kind of recovery day we get, if we don't, let's say we don't make a new low from today, the 5176 holds tomorrow after the release of PPI. Then if we don't get that and we set, depending on how we trade tomorrow, then Friday we might not even get a confirmation for that weekly reversal. And then you got to listen to me talk about we're still locked in to the trading range. If we can close lower and get confirmation, then there's going to be a way better, even like a 60% probability we'll see at least 2 more weeks down, at least getting down to minimum 51.25 to 50.50. There might be a 49 handle in there, but for right now, I'm going to stick with those numbers. Okay, so for the rest of the show, I'm just looking here. We're 34 minutes in. What I'll do is I'm going to go quickly straight through NASDAQ. I'm going to touch on the Russell, and then we'll go to the 10-year because there's a lot to talk about. So let's move on. So this is always interesting, folks. When I developed this market grid was developed in 1993, actually. And when I developed this, the goal was just trying to find where ranges are likely to stay within. And as always, for the most part, we'll stay within these ranges. And we did get just slightly below it. 70, the low today, let me just bring this up. The low for Wednesday was 18,112, and we had a low of 18,053. So we printed under it. We came almost down to this fib target that's here, 18,024. We actually did hit that and bounced off a little bit off of there, but we managed to close at 18,176, and so we're just below the 10 and just right above the 40, which is 18,185. So yeah, we're just right into that 40 period moving average here. I mentioned yesterday we did get some new fib targets in the upside, but now we've seen the market grid turn down. We're seeing everything start to form. And I think ultimately, I'm going to bring up the weekly chart. The weekly chart is actually a bit weaker, showing that the pattern is likely to weaken down towards the 17,000. I'm just rounding numbers off, 17,500. And this may evolve into something much more serious. My style is, rather than, sometimes we get clear targets, there is a pivot target right now on the screen down at 15,950. I don't see us getting there. There's a lot of support, but we are seeing all the algos on the S&P and the NASDAQ, everything's starting to weaken on a weekly basis, which tells you pretty much everything you need to know. Is that the best case is sideways. The worst, I guess the worst case is that will challenge this 21 and potentially go as low as the 40 period moving average. It is rising up, but we're probably still looking at 17, potentially 17,000, even if we go a couple months down the road. Tell you, following the Russell has just been brutal. We really got into an upward consolidation range. This is a weekly chart again. This is the cash, not the futures. It looks like the 21 is likely to be hit. That's 19,096, 19,996. And the algos are showing some stability along there, but really this market just once again locked in one of these big sideways range. I've been talking, we still have a slight upward slope in the pattern that may end up to be dominant around this 21 period moving average, but there's definitely a lot of issues here as far from a trending standpoint. And it's just a very, very difficult market to be involved in. And if you think about it, if we get to the interest rates do continue to go up, I'm going to show you something in a minute on a 10-year that I talked about. I always mention the Fibonacci targets when they're there because they get hit more than they don't. So you have to honor those when they come out there. But if the rates are going to stay high or higher than where they are right now, this index has got no chance. The only thing it's got going for it is we really need to be on the 10-year below, probably 4.25 under 4% for any real traction to happen here. And you've got I've seen folks hanging around CNBC talking about the index doubling. I think that's a little bit optimistic. There's still a lot of issues. I still am a bigger fan of the mid-cap stocks than I am on the small caps. All right, we'll go to the 10-year. I just put this up with a chart only. There were some indications that this is a weekly chart, and I thought, can we really hit these fib targets that are up here? You see these green dots up here. The targets with a WaveTech fib tool was 4.57, 4.74, and 4.9. And the 4.9 represents a retest of those highs that we made in October of last year. And we basically have hit this number here. It's 4.568, and the target was 4.575. So we did actually, from the standpoint here, is we do have the RTX sell signal potentially on a weekly basis. If we continue to stay above this level, then we're going to probably go sideways for a couple of weeks. Maybe this will, I would argue that on a retracement basis, maybe we'll call it 4.75 would probably be the extreme. But this is a very difficult situation because we're starting to see some acceleration, but if you can see here, this week is being projected to be the pinnacle of this move. So this is about the extreme, and it would make sense, especially to see what numbers we get out of the PPI tomorrow. So let's go to the daily, because there was also some fib targets there. Look at this. This is just this huge blow up. Fib target 1 was 4.50, 4.61, and 4.68. That's these green dots up here. But it's also showing that today's push-up was the peak, potentially the peak. This is that little V where the dotted lines are the projections from the auto regression. They're suggesting that they're going to go down. But look, it's not just PPM1. PPM2 has got the V. PPM3 has the V, and even the 200 has the V. So there's a good chance we're going to come back in. We definitely got an RTX sell signal. So sideways is going to be at least, maybe back into somewhere. We might get some crazy volatility tomorrow just with more news coming out. But it looks to me that we probably just blew this thing up, and we're going to start to consolidate again from this standpoint. I don't see, they said the predictions of 7 rate cuts this year have gone to basically 0. So now you got to know there's at least 1 or 2, right? But there probably won't be until after the election. My thoughts were the Fed had a window to lower yields in the June meeting, but with what we're seeing here now, it doesn't appear to be likely unless there's a massive reversal and we get back under, really we've got to be back under 4.15 on a 10 to even have a chance at having a setup as we come into the next Fed meeting. Cover crude here real quick. I would, we can see, even though we got this is daily. We got a decent rally yesterday, and I've been talking a bit. I think I was looking at some Brent crude numbers that were over 90, but we printed up to toward that higher end range that I've been talking about at around 80, 86. Close at 86.21. If indeed we see Iran make a move, then we're probably going to see higher prices. It's a very difficult environment in the Middle East right now, and I would call it's probably what most people have feared for a long time. And then on top of everything, we've got basically on most of the Western governments, and certainly here in the U.S., we've got absolute idiots making decisions. And I'm really concerned about the type of things that are being decided right now. It's very difficult. I don't think it's an easy situation to get out of, but I do think there's some not real good, solid thought process, and we should have never got here, but we're here. So crude oil, I'm going to bring up a weekly chart here quickly, and we'll see here on crude. Last week, we did get this RTXL signal, and so we should see, I think, a flattening out from that standpoint. But I've got to show these fib targets up here, and these are really big numbers. And just like what we were seeing in the interest rates, it's very similar here. Now, we've got a V-top on PPM1, but we do not have one on PPM2 or 3. We do have kind of a V-top on the PPM 200. So it's not as strong from the standpoint of getting a top. There's still a lot of underlying upward momentum here. And I just want to mention these targets because these are really big numbers. We're looking at 95, 94, fib target 1, fib target 2. If you, I think I'm in the way here on the screen. Let me get off. You can see these. Now you can't see these numbers here. Hang on one second. Now you should be able to see them. But the 95, 94, 106.70, and 113.39. Thanks, Abbey Road, for the money and the comment. Appreciate it. So we do need to consider these fib targets. They're valid. They've actually been projecting going all the way back to the beginning of this year, showing these $95 ranges on the intermediate. And the PPMs, PPM2 in particular is suggesting that it's going to turn up. So we could have this cycle run a little deeper into Q2 into Q3, and not necessarily probably going to be about demand. There's nothing really big here, and one of my most famous calls of all time, I was an analyst at a large firm, and I called that the August, actually about three weeks before the August invasion by Kuwait, crude oil was trading around $18. I called $32 to $36 on the upside. And somebody asked me, well, what would cause that to happen? I used to come up on a squawk box on our firm. And I said, I don't know, maybe there could be a war or something. Of course, that's what happened. In this situation, I don't see, as we've got this stink of war in the air, but I'm not getting those same kind of situations. So hopefully that means that we'll get this stuff diffused and nobody will get too crazy here. I'm really concerned with as much as Iran and Israel hate each other, that thing gets out of hand. And, it's, like I said, it's a very tense level of geopolitical risk that is out there right now. I always look to charts. If I was seeing some vertical move being projected, I'd be really, really concerned. right now. Be getting the iodine out just in case. But the point of this, I'm not seeing those crazy. In fact, I'm seeing still upward momentum on PPM2. PPM1 is just basically saying we're probably going to go sideways with a slight upward slope. But I would tell you, with what's going on, anything's possible. And these ranges that I just mentioned, 95 plus, are very likely, and the probabilities are reasonably high to reach that fib target number. Okay, so I had to bring up gold here. Gold is still continuing towards some of its fib targets, but you can see here we've got the V top on PPM1, PPM2, PPM3 not, but PPM 200. I'm saying PPM numbers, and only the 3 doesn't have the top. So my expectations are we could still print up to this higher end range where it's at 2450. We've satisfied the fib target 1, 2325. The high so far has been 2384. So we've satisfied that. We could print up to that next level, which is 2450. I think ultimately we get into some consolidation range. And I would also argue this as well, just what I was saying in crude oil. We're not seeing the vertical move. We've had a vertical move in gold, but it doesn't look like there's a parabolic move from here. But the but is there's still a number of these fib targets up here, 2450 and 2530. Are still valid targets, and we could move directly to them. We're certainly in a very bullish range. Even though the algos turned down, we're still at 1.40 on PPM1, and that is a substantial. That tells you that this is a very robust trend, and most likely we'll see extensions in this pattern. Okay, I'll come up with the Bitcoin. Bitcoin's been forming this flag, and back multiple weeks ago, back in early March, I suggested we were going to be locked in this range that's going to set up around that volatility. I talked about that volatility balloon that happens on the market grid, and we're still trying to consolidate. It's actually maintained. Volatility's been maintaining quite high here in this pattern. There's an argument that we're going to see another move on the upside, and I think we're now 7, 8, or 9 days from the halving event. But if we have this thing, maybe there's more upside. I would say every Bitcoin trader in the world believes it's going to go up after this. The algos are telling us a little different story. Algos are telling us that we're going to go sideways. We're probably going to print down into the 21 period moving average, which isn't could be, it's rising, but at the extreme right now, we have a couple things to look at. We have 3 fib targets, 60, 63.51, 59.24, and 56.735. So this is a possibility in the pattern, and this would also push us toward this 21 period moving average. It's at 51,900, and that is rising as well. So that probably 52,000 to 54,000 is probably going to be the bottom end. I think we still have to ultimately challenge that 60,750, 760 number that was the low back on over here on March 18th. And so far, that range has been maintained for the most part. The high-end range, the bar before that, the high was 73,974, and the low was 60,760, and we've been trading within that range all along. So nothing has changed at all from that standpoint. The only thing I'm going to point to is looking at these algos on a weekly, it's probably not, there's more potential sideways to down than there is upside at the moment. So I think probably if we were going to be forthright with the pattern, is that just the fact that everyone is expecting it to go up, then it has to go down, right? It's going to come back into these range. Those fib targets will be pretty important to watch. And then the 10-period moving average is at 54,600, and it's rising in this pattern as well. So in just a couple weeks' time, it's going to be right at that 60,000 low. So it's possible that we don't challenge 60,760, but if we do, then we'll see these other numbers, I believe, fairly strongly about that. Okay, so pretty good, 56 minutes, so our typical stream. I'll do two things tomorrow. If I am going to come up tomorrow, make sure you subscribe, hit the bell, so you'll know if I come live. And I will also put something out on Twitter if I'm going to come live tomorrow afternoon. Will be 7 o'clock Eastern time. Friday, I'm still planning. If you don't see me tomorrow and the markets are reasonably stable, then I'll handle everything in the Substack, kendallreport.com/newsletter, or you can, or I'll come up live either way. But on Friday, I'll definitely do the 2 p.m. time, as far as 2 p.m. Eastern time, to come in for the last couple hours of trading. So, okay, folks, appreciate everybody showing up, and I would just make sure you subscribe on the channel. Tell your friends, let's get this thing boosted up real close to 50,000. We need to get over that number. Can't do it without you folks. Thanks again for watching. Possibly see you tomorrow, if not Friday, 2 p.m. Eastern time.